Hey everyone, so today we're going to decode one of the most classic and honestly most powerful chart patterns out there, the cup and handle. If you've ever wanted a kind of blueprint to spot a stock that might be getting ready for a huge move, well, you are in exactly the right place. Okay, let's just dive right in. Think about it. The market is just this constant storm of noise. You've got news, opinions, endless data points hitting you all day long. So the big question for any of us is, how do you filter all that out and find a signal you can actually rely on, a real opportunity taking shape in the middle of all that chaos? Well, it turns out one of the most classic answers it looks like a teacup. The cup with handle is a chart pattern that basically acts like a signal flare. It's telling us that a stock has taken a breather, it's consolidated its gains, and now it might be building up the energy for a really significant breakout. Okay, and here's a really important piece of context. This isn't just some random shape that pops up on a chart. About 80 to 90% of the time, these patterns form when the entire market is actually pulling back. What that tells us is that we're on the hunt for strong stocks that are holding their ground and consolidating while everything else is weak. All right, so let's break down this blueprint. And we have to start at the very beginning, with the foundation. This part is a total non-negotiable. Seriously, without this first step, the rest of the pattern just doesn't matter. And that number? It's 30%. Before the cup even starts to take shape, the stock must have already been in an uptrend of at least 30%. You gotta remember, we're not digging through the bargain bin for beaten down stocks, we're looking for proven winners that are simply taking a well-deserved break. Yeah, you can really think of this uptrend as the launch pad. It's the proof that this thing can fly. It shows the stock already has real momentum, it has institutional support, and there's genuine investor interest behind it. It's that pre-existing strength that gives the potential breakout all its power. Okay, so once we have that launch pad, we can move to the cup itself, which is all about building the base. And this isn't just some random dip, you guys. This is the anatomy of a solid foundation being built right in front of our eyes. Now, the shape here, it is everything. You want to see a nice, rounded U shape, not a sharp, jagged V shape. So why is that? Well, a V shape is just a violent, sharp bounce. But a U shape, that's a slow, gradual, and really constructive correction. It takes time. And that's important because it methodically shakes out all the nervous, weak-handed investors. And this really gets to the psychology of what's happening under the surface. That slow, rounding bottom gives the stock time to move from weak hands into strong hands. It, quote, establishes a solid foundation of strong owners who are much less likely to sell on the next leg up, which, it just creates a much more stable foundation for the next big move. So what are the numbers you should have in your head? Okay, so for the cup itself, you're usually looking at a duration of about 3 to 6 months. And the correction from the very top to the very bottom of the cup should typically fall somewhere between 12% and 33%. These numbers help you tell the difference between a healthy pause and a stock that's actually broken. All right, so the base is built, the foundation is solid, and now we get to the final test. This is the last, and you could argue, the most critical piece of the whole puzzle. The handle. So the handle is just a small final shakeout of any remaining weak players, and it has a very specific checklist you need to follow. First, it has to form in the upper half of the cup. That shows the stock is still strong. Second, it should drift down a little bit, but not too much, usually between 8 and 12%. And third, and this is the big one, the trading volume should totally dry up. It should get very, very quiet. Let's talk about volume for a second, because it tells a whole story here. During that first uptrend, volume was high. While the cup was forming, it was probably pretty moderate. But then, during the handle, especially right at the bottom of it, that volume should just dry up. It should almost disappear. And that right there is a huge signal that the sellers are finally exhausted. There's just not much stock left for sale. Oh, and here's a major pro tip for you. Be really careful with handles that wedge up. That means the price lows are actually drifting upward instead of downward. It can look kind of bullish, right? But more often than not, it's a sign that something's not quite right under the hood, and these patterns have a really high chance of failing. Okay, so the foundation's set, the handle has formed, the sellers are gone. Now what? Well, now it's go time. Let's talk about how to read that final signal. So the breakout, that's when the price finally punches up and out of that handle. But listen, price by itself isn't enough. You need confirmation. And that confirmation comes from a massive surge in volume. We're talking at least 40 to 50% above its normal average day. And that spike in volume, it's not just random activity. That is the footprint, the unmistakable footprint of the big institutional players. It's the confirmation that the big money is stepping in with real conviction to drive the stock higher. That, my friends, is your green light. All right, so let's put it all together. Here is your final blueprint, your checklist. You need that 30% or more prior uptrend. You need a rounded U-shaped cup, not a V, that corrects between 12 and 33%. You need a handle that drifts down where the volume just dries up completely. And finally, you need that breakout on a huge volume surge of at least 40 to 50%. You check all those boxes and you've got the anatomy of a really high potential setup. And that kind of leaves us with one last fascinating question to chew on. We've just laid out this whole pattern of buying and selling, but which comes first? Is this pattern just a map of predictable human behavior, fear and greed playing out on a chart? Or, because so many of us are now watching for this exact map, do we actually help create the behavior that the map is supposed to predict? It's a real chicken and egg thing, isn't it? Something to think about. Thanks for joining me today to decode the cup and handle.